Hello all, Tony here. US stock markets closed at record highs on Friday as a cooler than expected inflation report reinforced expectations of multiple Fed rate cuts before the end of this year. US equity futures have extended those gains this morning on reports that US and Chinese trade negotiators have reached a preliminary consensus on a framework trade deal pending final approval by Presidents Trump and Xi later this week. With Thursday's FOMC meeting widely expected to deliver a 25 basis point rate cut, and with no set dots to dissect, attention will largely focus on Q3 2025 earnings this week. We do have 44% of the S&P 500 market cap set to report this week, including hyperscalers, Microsoft, Meta, Alphabet, Amazon, and also Apple. Let's take a look at the charts of the NASDAQ and the S&P 500 to see where they are as we start this new week. All right, so what you can see before you is the chart of the NASDAQ cash. Now, as I mentioned in the commentary just a few moments ago, US equity futures have opened, and we'd probably expect to see the NASDAQ, when it opens tonight for trading, probably push up above 25,600-ish. That's presuming the move we've seen today in Asia does follow through tonight. But either way, what we need to be mindful of is this still sits to me as a wave 5 with an Elliott wave. You can see this is from the April lows, the Liberation Day sell-off. We've got your wave 1, your wave 2 here. This is your wave 3, and then you have a correction here for wave 4, and then the uptrend resumes. Now, wave 5 is extending, as we've mentioned, and what we need to be mindful of is that once a wave 5 is complete, we usually get a pullback of some degree. At this point of time, I would use a couple of guardrails as a warning to when that wave 5 may have topped out. We don't have anything in place at this point of time, but if we were to see a break below this layer of support at 25,000 coming from these highs through here, then that would be an initial indication that potentially we're seeing a deeper pullback into what I'm now calling medium support, coming in around 24,000, this yellow trend line here, which you can see here. And if we were to break below there, well, then back towards 23,000. But at this point of time, you have to allow this uptrend, this wave 5, to continue to extend, and possible targets remain around 26,000. So let's see how that plays out for this week. For the S&P 500, a similar story. You can see we're looking at a 5-wave advance from off the April lows. Once again, this is Elliott wave theory. This is your wave 1, your wave 2, your wave 3, your wave 4, and wave 5 is extending, as we can see at this point of time. Popped up above 6,800 on Friday evening. Now, for me, the equivalent short-term levels of support in the S&P 500 are coming in at this point of time around 67.60, this high here, and 67.40, these highs over here. So that's my short-term support, my first reassessment level if things will start to turn more towards a negative slant, if you like. But really, I would need to see it break below 65.50, these lows through here, to really start to think that potentially this impulsive move higher is complete and that a deeper pullback is underway. Until then, allow for the S&P 500 to continue to extend those gains. 6,900 potentially is the next level, with the big psychologically important 7,000 sitting above that. That's all for this week. Stay tuned for more updates ahead.